across the Illawarra, Shoalhaven and Southern Highlands. This is ABC Illawarra.
It is indeed. So the four months, 4 increases. The interest rate hikes are at a pace we haven't seen since 1994. Cash rate target sitting at 1.85%. How is the Reserve Bank's increasing interest rates affecting you? I would love to hear from you. This sort of means for a loan at $1 million, which doesn't seem out of the ordinary at all at the moment, the combined interest rate rises over the last 4 months mean you are paying close to an extra $1,000 a month in loan repayments. $1,000 a month. All right, local financial analyst Martin North is on the line to break it down for us. Hello, Mr. North.
G'day, how you going?
I'm all right. How will these rises help curb inflation?
Well, the inflation, of course, is being created by supply chain disruption internationally. Rate rises doesn't directly impact that. It also is a result of very many years of loose monetary policy from the RBA. They took rates down a long way and did a lot of quantitative easing. But there is also some local pressure on supply and demand. And so what they're arguing is that by putting rates up, they're trying to make the demand side of the economy shrink to fit the supply side, but it's a long bow. So I'm a bit sceptical as to whether this is actually going to really rein in the inflation that we've got at the moment.
Yeah, and so that is the intended effect. But what about the effect on people? What does this mean for people who have mortgages? As I said, an extra $1,000. What's the overall impact on new homeowners and people just trying to get by?
Well, it is very, very concerning, of course, and many people took the RBA at their word last year when they said no rate rises until 2024, and here we are, 1.85% higher and counting. Many people have got commitments which are very large mortgages, particularly because, of course, the government encouraged people to come into the property market, the Home Builder program, the First Home and Grant program. So a lot of people brought their plans forward to buy into the market. So we have a lot of people who bought in relatively recently with very large mortgages, and suddenly they're finding that, well, they can't make ends meet now. And in fact, in my mortgage stress numbers, we're seeing them go through the roof. So we've never had more people struggling with cash flow, trying to deal with all of these obligations in terms of mortgage, and by the way, rental stress is also pretty bad as well. So more people in difficulty. The other point, of course, is that incomes have not risen at all in the last decade in real terms, and the cost of living, that's, food and everything, very much higher, whilst the overall inflation typically is 6.1% as quoted by the ABS. In real terms, we know that food costs, for example, have gone up closer to 20% and other costs going up too. So many households are really now up against it with more rate rises coming down the tubes.
So you a few things I want to pick you up on there. When you talk about the Philip Lowe, the RBA governor, he said it wasn't going to go up until 2024. You can't really say that to your lender. You can't say, well, I wasn't told this. I remember the previous Prime Minister saying, when asked about rental stress and that, he was helping everyone to get into buying a home. So people were encouraged to do that. I mean, what does this do to people's confidence in the Reserve Bank and even in the Philip Lowe's job?
Well, I have to say confidence levels should rightly be questioned at the moment. And, of course, there is a review underway at the moment, or shortly starting, to look at the Reserve Bank and the way that it's handled monetary policy over recent years. That review is way over time. I don't actually think that the board structure is working that well. The RBA's got it wrong for so many times, for such a long period of time. They're very bad at estimating inflation or indeed wages growth or anything. So they have really not been very strong and positive in terms of pulling the right levers at the right time, in my view. And by the way, they're not alone. Most other central banks are doing precisely the same. They've got this weird view, I think, that they somehow are all-seeing and all-knowing, and therefore what they say is going to happen always happens. Unfortunately, reality gets in the way.
What about, Philip Lowe also talked about restraining wage growth to contain surging inflation. And how much is that to blame, and how much is, and this is just from an article in The Conversation that I've read, that profits have actually played a bigger role in the pressures on inflation?
Yeah, so if you look at the last few years, there's been huge growth in corporate profits, and they have actually done extremely well. So most corporations have been paying out very large amounts, and those have actually been part of the story in terms of inflation. In other words, corporates have been growing, but actually, if you look at real wages growth, it's going backwards. And in fact, most people have actually seen no real improvement in recent times. So at the moment, our economy and its settings are completely misplaced. I think the previous government are partly responsible, by the way. I think that they've actually shaped this economy the wrong way. Unfortunately, the households and businesses who are the cornerstone of the economy are the ones being left behind, whilst big businesses and corporations are still making huge amounts of money. And a lot of those dividends, by the way, which are being created, go directly offshore, so it doesn't benefit us at all.
You mentioned wage growths haven't increased. Inflation's at 6.1, but the actual price rises in fruit and veg and stuff at the shops has gone up 20%. People are saying it's like shopping at a service station when you go to the supermarket these days, looking at the costs. We're also seeing changes to the way lenders and lenders are behaving. ABC business reporter Amelia Terzon spoke today with a Wollongong couple who had a mortgage approved for $975,000 at the end of last year. When they went back to their broker last month, they were told they're now only approved for $750,000. And in this area, they were saying they feel like they can only afford a shack. Are you seeing widespread changes in how lenders and borrowers are behaving?
Yeah, absolutely. The so-called borrowing power, which is effectively what multiple of incomes will the banks lend to, that's dropped on average by 20%, sometimes a bit more than that, and it's happened very quickly. So a lot of people, as you say, made a commitment on one basis and suddenly find that the rug's been pulled out from under them, and most lenders are doing the same. It's very hard to get anything like what you would have got a few months ago. And the reason for that is that the 3% buffer, which is what their banks work on, is from APRA, and that's above the standard mortgage rate. So as mortgage rate goes up, then effectively they say, well, you can borrow less. And by the way, people are still borrowing 6, 7, 8, 9 times income at the moment in some cases, and that is still very risky. You should be looking at 3, 4, 5 rather than 6, 7, 8. So we've got lending standards, I think, that were very much too loose, getting a little tighter. But people have been caught on a crossfire here, and it's all because it's happening so quickly. And many people have never lived in an environment when interest rates have been going up, and this is, for them a new experience. Unfortunately, rates do go up, and unfortunately, people get caught.
And we'll certainly have people reminding us that they were living in a period where interest rates were going up. But you mentioned the previous government. The Shadow Treasurer has said what we need to see is an economic plan from the current federal government. Do you agree? Is the government lacking an economic plan?
Well, I'd first say, where was the economic plan from the previous government? They got us into this mess in the first place, frankly. Look, we have to focus on making our economy more productive. We need more investment in local manufacturing. We need more support for small businesses. I think we need more support for households through this cycle as well. And look, it's early days. I worry that the Labour government is also being over-influenced by the neoliberals within the Treasury organisation that are still there and still propagating the same thing, which is we've got to fight internationally and we've got to be efficient at the things we can do but get everything else offshore. I think we need to change that. I think we need to focus on more local business growth here and more local manufacturing. There are things that could be done, but it really flies in the face of the last 20 or 30 years. And then the other question is the role of large corporations and their power. And, I look at the gas market, for example, I look at the finance sector. They are having too much of power on the rest of the economy, so that's something else that needs to be tackled. The question is, will politics get serious about tackling those underlying issues, or will they just continue to sort of tap the ball along and just say, well, it's all very sad, but there's not much we can do? I worry that they might squib it, but I hope they don't.
All right. Nick McKim from the Greens Treasury also can question the role of corporate profiteering as well. We already talked about that, didn't we? Do you think big companies are using the cover of inflation to gouge prices and further drive up inflation, or is this just sort of a product of the way that the economy's been heading?
I do think that there are plenty of examples where the price rises are way more than they should be, just based on where the input costs are. It's very hard to unpack them, and the ACCC is doing a bit of a job in some areas. But no, it seems to me that people are profiteering, and particularly the large corporations and you've got to look at the energy companies there as well. Many of them are making excess profits. I think we should be looking at windfall taxes and those sorts of things. The other point I'd make is that, do you remember that the RBA gave really cheap money to the banks called the Term Funding Facility? Well, now that money is sitting back at the RBA. The banks are actually getting money from the RBA for the Term Funding Facility. That should stop immediately. There are things that could be done, but it would disrupt the sort of the present order, as it were. And so the question is, will they have the intestinal fortitude to do it? They should, because if they don't, we're going to actually have a very, very uncomfortable ride for the next 2 or 3 years.
There'll be a lot of eyes on Philip Lowe for sure. Martin North, thank you very much for speaking with us today.
Good to talk to you.
A local financial analyst based here in Thirroul from Digital Finance Analytics, Martin North.